I literally was looking at a 25,000 square foot church just the other day.
Damn, that's big.
It was huge, man. But like I wanted it for, I wanted to turn it into a pickleball place because
Now you're talking my language. Let's
it was,
go.
dude, it was badass.
That's insane.
Yeah, like I went and toured it in the setup. It was just funky. And then it really would have only gotten one court. And I was like, nah, but it was 500,000 bucks and huge. But if I could have gotten two or three courts, I probably would have easily done it.
Yeah, that sounds amazing.
But yeah, I'm looking for quirky, like weird things like that. There was another deal on like the east side, San Antonio, and it was very similar setup to what you took down. Two lots side by side, historic district.
Mhm.
So like very cool upstairs, old, like very old retail shop that I was going to convert into our offices. But dude, yeah, it was like I've watched some of your videos. You look like you do full blown, let's do everything, everything. Yeah.
Unfortunately, yeah.
Yeah.
If you're a real estate agent earning $200,000 a year and you want to grow your passive income, this show is for you. Learn secrets other agents use and hear from experts in our field who will guide you on your journey to investing in assets like apartment communities so you can take your commissions and turn them into cash flow. Here's your host, Randall. Let's dive in.
Hey, welcome back. It's awesome to have you again today. I have an awesome guest. His name's Tommy Harr. We're going to talk about rehabs pretty heavily today and wholesaling, that sort of thing. How he gets business. We talk some details because I'm currently doing a bunch of rehabs as well. So I was curious how he structured his business and his company. And so we dive in some of the details on that. If you're interested in how to structure some of the things on the rehab side of the business, definitely has a bunch of tactics on that front because he's doing a great job. They're up to, I think he says at any given time, they have 15 rehab projects going on at a time, along with 7 to 15 wholesales that they're working on. So they're a high volume business and it's really impressive what they are working on. So I know you're going to get a lot out of the show. Now, if you could, wherever you listen to this, if you're getting some value out of the show, please go on, rate and review, leave a 1-word comment or some more words if you like to. We always think that. Appreciate that. We'll read the reviews and definitely appreciate any feedback that you guys have. So without further ado, let's jump on and let's chat with Tommy. Here we go. Thanks for jumping on, man. It's good to have you on the show today. I'm really excited for this conversation because we are one and the same, but not, right? Obviously, you got your thing going on, but when I read your story and I know what you're working on, I'm like, okay, you're doing very similar stuff. So we have a lot to talk about. Again, thanks for jumping on the show. First thing, let's jump in and talk about what's your main focus? Is it the rehab? Is it the wholesale and the rentals? What is the top of the top?
Everything has always been wholesaling. So our business started 6 years ago, 5, 6 years ago, wholesaling, and that's been our backbone. So deal finding, but the end goal is to hold properties. And I think the intermediary there is building a construction company and construction business to where you can exit a different way. So if you flip it, that's just one exit, but you have to build that system to do the burr method. So the flipping is just to build the capital and to keep mouths fed and keep the business open. But the long term is to cherry pick the best deals and keep them doing the burr method. And we manage them in-house as well. But everything starts with the deal, the wholesaling side. So they all morph into each other.
Yeah, yeah. Okay. Very similar setup. I started with the rehab. Like I was like, it's so hard to find a deal. Once you find it, I want to actually take that deal and run with it. And then we morphed later into the wholesale side. So you're coming at it like, I know finding the deal is the hardest thing. Once you have it, you have multiple exits. And if you're the one that's buying it, controlling the deal, then you're in it as deep as possible. Then you have all those exits. Okay. Love it. Deal flow wise, what are you guys taking down now compared to maybe 2 years ago when it was just red hot and things were going on?
We're buying anything in the first time home buyer range, mostly cosmetic to medium rehab. I'm in Columbus, Ohio, so we have houses that are 100+ years old. Veering away from those, like I was telling you earlier before we were chatting, losing 100 or not 100 grand, that was my first flip, losing 20 grand on a flip tomorrow. And it's an 100-year-old house. We took 10 months too long. The permits were a pain. So just so many variables. Markets changed like 2 or 3 times during that time period. So something that we can get in and out of within a couple months and has that multiple exits. So in Columbus, that's the under 100 to 200, maybe 250. Love that price point. We can wholesale those as well. So there's just so many options with those.
Yeah. Did I hear you say under 100? There are like full retail sales under 100 rehabbed, or is that
not rehabbed really anymore?
Okay.
Used to be. So for example, in a couple of days, we're buying two. So tomorrow I'm buying one for 85. We're going to put 50 into it. It'll be worth 220.
Yeah.
Really the same deal for the other one. We're buying it for 85, putting 60 into it. It'll be worth 220 as well.
Yeah.
So we can keep it, flip it, whatever.
Yeah. All right. That's like very similar to the price points. Like I'm looking to be 140 into these deals and we're owner financing them around the 215 mark.
Damn.
And so trying to keep that get a down payment, get our bases down in the deal. But we have the same type of, right? Like in that price point, San Antonio market is very similar to what it sounds like you're targeting. All right, let's talk about then those long, large deals, 100-year-old houses. I have done a few of them and I understand some of the challenges, but for anyone not in the rehab game, what are some of the challenges you find when you're rehabbing a 100-year-old house?
The first thing is going to be just not knowing what you don't know in rehabbing. If you don't, especially with the eras of houses, so 100 years old, you have knob and tube, you're going to have slate roofs, you're going to have maybe asbestos insulation, you're going to have termite damage, you're going to have things that you open up these walls in specific areas. Most of the 100-year-old house areas in Columbus, in order to get top ARV, they have to be gutted. So you take these down to the studs, redo everything other than the shell. And so you just get into these clay pipes and just things that are so old, you need to replace them. And then on top of that, like the house I'm losing money on tomorrow, we waited 6 months for permits. So towards the tail end of COVID, the city stopped going into the office as much, making the excuses, and there was like 10 revisions they needed. So having somebody on your team, or it's a who not how thing, make sure you're getting with a contractor or designer or architect that knows people in the city and they can pull strings and get your permits pulled really fast.
Yeah, that is key. All right, so you had the permitting issue, but again, when you're rehabbing one of those houses, you mentioned it, and it's like you went through 2-3 market cycles. It's wild because they just take so long to do, not just on the permitting side, but if you're doing every single thing on them. And I found that to be the case. We did 200-year-old houses like when I was doing full rehabs and that sort of thing, and both of them took forever, a lot longer. A historic district, are yours in historic districts?
Man. I'm selling one next week in a historic, and that one, that's a whole nother story. And but that,
yeah, it's brutal, man. Okay, that's on the older homes. I guess I'm curious, just in general. So you have a deal that comes in. Like one part of the conversation we could have is tactics. Like, how are you guys finding deals? Right?
Sure.
Everybody always wants to know, what are you doing? What's your best lead source that you're bringing in? So I don't know if you're an open book on that front or not.
Open book about everything.
Yeah. So right now, finding a deal. Every market's going to be different. What is it that you guys are doing that you're seeing the best results in?
Yeah. So I'm going to split this into two. So our wholesaling side of like truly finding deals every single day, direct to seller marketing. We've texted and cold called for the last 5 years. So we have overseas cold callers. We have 5 of them. They call around the clock. They're just getting hand raises. So they're calling, hey, is this so-and-so? Because we look at it as a funnel. You're pulling lists online. You're skip tracing those lists, and then you're just mass marketing out to them to figure out if you have the right data, the right person, and if they want to even consider selling. To me, that's what is a lead. So that lead then goes into our acquisitions teams. We have 2 sales team members on the acquisition side and 1 dispo. So those guys are touching warm leads and just following up with people every single day. That's what they do for a living. So texting and cold calling, and then texting has gone through some legalities the last 6, 8, 12 months. But it seems like we found a kind of neutral area at this point, but that's what been our deal flow. I think it's probably 12 to 15 contracts or so a month right now on the wholesale side. And we're wholesaling most of our wholesale deals because we're trying to generate more cash on that end. But we still need to feed our flipping business, which is 10 to 15 projects at a time as well. So we used to buy a lot of our direct to seller stuff, but now we just cherry pick them. So now we hired, we're calling our JV department. So for business to business relationships. So really building a system off of networking, seeing all the deals, offering on MLS. There are deals on the MLS for anybody that's on here listening to this. And the main thing about that business is the squeaky wheel gets the grease. So if you're the person that's touching base with these wholesalers every day, every week, seeing what they got, they're going to remember you and they're going to send you what they have, and then helping educate them on what deals look like, you're going to start getting deals out of nowhere.
Yeah, I couldn't agree more with that. So your spend right now on the marketing front, how are you guys looking on the calling, the skipping, the lists? Like those are all things you're buying and paying for.
Yep. On a month-to-month basis, our overhead without commissions, this is including VAs, CRM, skip tracing, list pulling, is 10 grand.
Ooh, man. That is crazy low.
We're the leanest company. I know a lot of people around the country, and every time I say that, they're like, that's insane.
Yeah.
So we use a lot of REI Sift. If you've heard of that, Tyler Austin's program, write that down. REI Sift is a great way to not double skip trace things. So a lot of people, what they do is they need more marketing. They go buy a list and then they skip trace it immediately and start blasting. So REI Sift is a data management software that's going to house everything, stack your data. It's a full CRM too, but we just use it for data. And then it's going to have you target market and not re-skip trace things. So you tag the list coming in, and then you can confidently, and you just know what your marketing is and who you're marketing to. It's really complex at the end of the day, but that's the easiest way I can explain what it is.
No, I've seen similar things, but it wasn't called that when we were digging into this,
Mhm.
because we were spending 50,000 a month easy on direct
Yep.
mail, and that was the biggest driver of business. We tried a few other things. We never did the actual cold calling outbound, but a number of guys and some masterminds I was in, they were doing that, and it was like becoming a bigger and bigger thing in 18, 19.
Yep.
So how are you guys getting around what was it, like AP2 compliance now that's come out that everybody has to go through for the text messaging?
So we just work through it with the companies. And to be honest, like I have a business partner that kind of handles that entire, that side. And then we've taught one of our virtual assistants all of the texting, all of the REI SIFT I just talked about, all of the compliance, and she just deals with that stuff now too.
Okay. Yeah. Solid. So for that 10K spend, is that nationwide or is this just in your market?
Just Columbus, Ohio. So Columbus, Ohio and bordering counties like 45 minutes out.
So what's the demographic? What are the trends on population? Are you guys booming right now or what's happening?
Booming.
Yeah.
Columbus has been a top 5 market in the last 5 years, every single year. You never know what to trust, right? In these, but Forbes just says it's the fastest growing city in the United States.
All
We've got Intel coming in, Google, there's a lot of data centers. It's not expensive. So Intel is building a multi-billion-dollar chip plant right now. And the average salary for the people coming in, thousands of people, is 100 grand plus. And in Columbus, that's phenomenal.
Yeah.
If you're making 100 grand, you're living a good wage.
Yeah. Yeah. Oh, awesome. Yeah. Cause again, that spend on that deal flow, you're talking 15 deals a month, and the 15 projects, is that outside of that number?
Yeah.
Yeah. So you're doing 30.
Contracts wise, sorry to cut you off. Contracts wise, obviously have fallouts, and obviously some linger into the others, like probates and those things. Some wait a little longer. So we're closing 7 to 10 on the wholesale side a month, and then another 5 to 10 on the purchase and sell side.
Yeah. Awesome, man. So let me get back into the wholesale then, because I shifted again from I want to blast out all this marketing, I want to do all of this, and I'm going to wholesale, to I'm just going to select the wholesalers. Like for the business that we are doing where we're raising capital and buying 25 houses a year and putting them in a fund.
Yep.
I don't want to spin up an entire acquisitions team, dispo team, all of that. And so I've transitioned into just talking to wholesalers. So what are you guys seeing on your deals? And when you're wholesaling right now in this type of market for this type of marketing, are you guys still getting a contract for $10 option fee and you got 90 days to close on it? Or is it like sellers want their cash now, I'm going to close on it quickly, I give you 30 days? What does a typical contract look like for you guys?
Our typical contract is 30-day due diligence. And once we get our inspection, it's usually, if it's a good deal, sold within 7 to 10 days. So closed. Our cash conversion cycle, once it's in contract, is maybe like 21 days. Yeah. But we're trying to churn and burn them as fast as we can.
Yeah, got it. So the market in San Antonio for wholesalers turned into 85% ARV sale price. It was insane. Right. Okay, I'm not buying anything from anybody. They're selling it based on, you're betting on the come. The value of the house is going to go up while you're rehabbing it type thing, right? That was the argument. So again, that's why I didn't buy anything from anybody. So right now, when you guys are marketing them, what are you guys seeing is the percent ARV that investors are looking to buy?
I think most people are sitting at that 70 to 75% ARV minus rehab. I think that's pretty common. That's pretty standard. And it changed a little bit, obviously, the same way with you, with the hedge funds and everything. Everybody was buying at way higher prices. And now I think everybody's come back to reality, and it's been nice to see. So it's April, almost May. Back in up till November, it got really tight. Not a lot of people buying. And we saw some floodgates open around December and into the new year. Now people are buying like crazy again, which is really good to see.
Yeah, it's the same sentiment down here. Okay, so you guys have those deals. Now talk to me about building your team. Were you still doing home inspections when you started building the team out?
Yes.
Okay, so how did you start building the team, and where did you get this model from? Because it's a model that, like, I don't know if you did a mastermind or if you did something else, or if you just built this out of your head. Tell me.
No, I mean, I mastermind around the country, and I model a lot of the things that we've done around people that I highly respect. Somebody down in Texas, Donovan Ruffin, I'm sure you've bought from him. Definitely model a lot off of them, and then a couple guys that I know. So I was inspecting full-time up till 4 years ago. And you just can't do it all yourself. And my business partner had been in car sales for 10 years. He owned car lots by the time he was 22, 23, and then was a sales manager for a big car dealership. And he was like, dude, I don't want to be on the phones forever. I just don't want to, but I know you need to do the acquisitions. So we just started to replace ourselves and build a real business. So the first thing we did was hire an acquisition. And then we were starting to run some rehabs, and I hired a project manager. And then, well, even before that, I was self-managing all of our properties, or mine at least, because I own some, he owns some. So a virtual assistant on that end to free up some of our time. And then VAs on the data side for the wholesaling, and then hired a project manager, and then just started to build the team from there.
Okay, awesome, man. Before we move on, you were able to retire your mom, is what it looked like. So that's pretty awesome, man.
Yeah, I always put an asterisk next to it because she
Okay.
still works. She was a teacher for 30 years,
Yeah.
but hated waking up in the morning. She was a ninth grade algebra teacher, just shithead kids.
Yeah.
And over time, that's a long story, but she finally quit 2.5, 3 years ago to sell our deals full time. So flipping more. She was my agent. Told her to get her agent license 6, 7 years ago when I was getting started. Had done very little business, and now she's making a couple $100,000 selling our deals. So she works less, creates her own schedule, all that stuff. So
that's awesome.
I always put that in asterisk.
Yeah, but retired from the job she was doing in order to work with you. Yeah, that's amazing, man, to be able to do that. So how is it just working with your mom?
We're both very headstrong. We're very opinionated, and we butt heads a little bit. So the way it works with her is not on cosmetic rehabs, but the bigger ones where we're changing floor plans and we're adding different kitchen designs. She comes in and helps on the front end, and then she comes and sells it on the back end, and we manage the system, the rehab, all that stuff.
Yeah.
And a lot of times we have different budgets in mind, and there's different, it's all love at the end of the day, but there's a lot of back and forth and aggression sometimes, I'll say.
Yeah. I work with my wife, and my brother was working with us for a while too. And so, yes, I get working with family, but it's also great. It's fantastic. You can't talk to anyone like you can your mom.
And there's always the trust factor too on the back end. Does she always have our best interest in mind? Yes. It's your mother, obviously. So that is always good peace of mind to know that every deal is being handled the way it should. And there's no doubt that everybody's working towards the common goal.
Yeah. Okay, man, let's talk about some rehabs then. I'm curious now. You built out your team, right? And we had a very similar setup. Couple act guys, dispo, transaction coordinator, all that sort of thing. And then when we were doing the same thing, cherry picking the deals for us to rehab, we got super busy, and it's impossible to run 15 rehabs and projects by yourself. It's not impossible, but it's going to be challenging. So compare how you used to do it to how it works now. And then let's dive into kind of now what it looks like.
So before, it was just like anybody else, doing a little bit of the work yourself and like just winging it and choosing finishes as you go. Now it's very plain and simple. We have a material list that we use for every rehab, and it's split into two. We have a builder grade and a higher end. We're not doing luxury houses. So we have the same paint, the same floors, the same trim, the same doors. Everything is the same. And that allows us to have predictability. And our contractors also know the expectations of what they're using and what they're going to be doing. So we have a material list. And then obviously before we start, we have a regular scope of work, and we have a contract review scope of work, which breaks it down by sides of the house, front, left, right, back, each room, mechanicals, really in detail. Everybody's on the same page. And then once we start, we're really off to the races. We have a warehouse now that we house all the materials. Lowe's does a warehousing program. So they stock everything for us. We take it, we drop it on site, and the guys are off to the races. And our philosophy on rehabbing, I found this is the best way that I found to do it, is if we're doing a full gut rehab, I'll use specialized trades, subcontractors up to drywall. So I'll have my own framer, I'll have my own plumber, my own electrician, my own HVAC person, my own window person, siding, because you get your costs down that way, as if you were using GC, it'd go up. And then I have 4 or 5 crews that work only for me. And they have, so it's one guy, 2 or 3 family members, or 4 people, and they come and do setting the cabinets, tile, flooring, trim, and they're just doing that all the time.
Yeah. Okay. So the project manager's really in charge. You're giving them 123 Main Street. This is your baby. You see it all the way through to the end. Here's a list of approved electricians, plumbers, blah, blah, blah. We have 3 of them. That's basically how you have it set up. What are you using for scopes of work then? Because you're walking through a house and you're like, all right, the front scope of work. What kind of tech? I want to know some tools and tips. And what are you doing on the tech side, on like checklists and all that stuff? You touched on that, but.
So on the tech side, it's not anything like super robust. I've not found anything like scope wise that's all that amazing. We use a custom Google Sheet that we use, obviously. But what we do is we use virtual assistants for that. So we have one project management virtual assistant, and he has the template, and we have it with us when we're out on site. Then we voice message on WhatsApp to the virtual assistant while we're there, and we go line by line with them. By the time we get back to the office, the scope of work is completely done, and ready to get bidded out by the contractor. So that eliminates 2-3 hours of figuring out, remembering things when you're on site. So that gets done. And also at the same time, since the material list is systemized, we know exactly, the VA can know exactly what to order. And that gets put in our Amazon cart. And also we know what's warehoused from our Lowe's account as well. So we're able to grab everything quickly. And then when we're ready to put it on site, we do.
All right. So Lowe's warehousing, tell me about that. Because I just bought a bunch of stuff for a few jobs and they keep calling me every day. They're like, hey, got to pick this up. So what's the warehousing side?
Yeah. So we just bought a warehouse. We're still somewhat in infancy, but I have a mentor or a friend that did it really successfully. So what they'll do is they'll come weekly, bi-weekly, monthly, and whatever you're using. So we use the same tubs, we use the same faucets, we use the same door handles, we use the same insulation. They will come stock it for you. If you have an LAR, so a Lowe's account receivable, they'll stock it for you. So they'll bring truckloads of it. And then in the next 2 weeks, they'll come and inventory it. So they'll come and see what you've used, and then they charge you for what you've used.
That's awesome.
So we now have it on site, ready to go for all of our places. And then the only things that we have to go get are Amazon things. So we use Amazon light fixtures, certain things they can't price match, but they came way down on their prices on a lot of things.
Mm-hmm.
And it's now all centralized.
Yeah, that's awesome. All right. So how big is the warehouse that you need in order to maintain all of this?
The one we have is about 2,000 square foot. So nothing insane. We're still toying with how many of each thing we need. So it's still a work in progress.
Yeah.
We probably started it 3 months ago, but it seems like it's going to be a really good thing.
Did they come and help you do the finish out for that?
Yeah, so they know what they're doing. If you get a really good Lowe's Pro, they'll help you. They came to our office, sat down with 4 or 5 reps. They had their paint guy. They had all these people. And we just talk about what we're using. So the only thing they couldn't match was like our LVP we get from Floor and Decor. If you have that, I don't know if you have that in Texas.
Yeah, we do.
But their prices were just way better. And they just can't really touch these. So everything else was pretty comparable.
I saw a tile that you used on a shower. It was on your, it may have been a couple years ago though, but it was on your X page. I literally just put the same tile. It's like kind of wavy, but it's about this size. Where are you getting that? Is that a Floor and Decor deal?
I have to think which one that is. It's probably Floor and Decor though.
Yeah. Okay. Because my buddy's got a flooring company here and he sold it to me. Jason, I'm going to get a discount on that next time, buddy. All right, man. Okay. Go back just out of curiosity. And this is really in the weeds. So anyone listening to this, I'm digging deep because this is what we do on the rehab front and we are stepping ours up. Like we're trying to acquire more deals. You got a virtual assistant who is looking at a Google sheet while you're walking the property and you say, hey, I'm at the front. And then are you talking to them or are you voice chatting them to where it's all
voice chatting?
Voice chatting.
So
okay.
We're just sitting there, go line by line, and they can re-listen to it. So just like you would on an app. So they have WhatsApp. He's in Nigeria. His name's Andy. Yep. So, hey, gutters. We need new seamless gutters on the front of the house. 1 downspout. Make sure it kicks out 6 feet. Yep. Next thing, what's written down. Everything. And then also, we use Slack for communications in our business. So whenever we buy anything on the fly, we send it in the Slack. It's under project tracking. And he's going in and we built out our own project trackers. So we break them out from receipts to invoices. Yep. And he has the Lowe's accounts receivable as long as we use the right email, right? And he'll break down every single receipt total and then everything that was purchased. So then we'll know what we're buying, what we're not using. So we're trying to just gather as much data as we can and be predictable about some of the decisions we're making.
Yeah, for sure. Man, that's awesome. I love like a process map that's done. They can geek out on those things.
Yeah. I'll share all those project trackers and everything with you when we get off here too, if you want to
be awesome. Yeah, for sure. Did you ever have GCs or did you always just run it on? Okay. Yeah. So what are some of the benefits of having it all in-house compared to having a GC other than just the price gets?
Being able to controllables. So you never know when they're taking some of the material to the next job. And I like to just be in charge. I want to get the American Express points for buying them online. I want to be able to just because there's so little that you can control fully. And I feel like that is something you can truly control. So materials is a big one. And it's not that hard at the end of the day. It's just more time consuming and more people.
Yeah.
And it's all about setting the right expectation with everybody. So every contract I know that works for us, they know exactly how I like things. Like, doesn't matter what material we use, whether it's our builder grade or high end, the paint lines need to be the same. The schluters need to be installed the same. Mm-hmm. There needs to be paper on the floors, no matter if it's carpet or if it's engineered hardwood. Like, it's just certain things that need to happen.
Yeah. Do it the right way. Do it your way. That's awesome.
Yep.
So then let's talk about financing. Like,
Okay.
how are you acquiring these deals? I know that you have you have some short-term rentals. Is that correct?
Yeah.
All right. So you got some short-term rentals. You have all these rehabs that you're doing at the same time. So how are you structuring these deals? Are you doing Burr?
Yeah.
I'm going to give you like 10 questions at once to
Okay.
answer.
I like it.
Don't
I like
worry
it.
about it. Sorry, man. I'm just kidding.
No, I like it.
Yeah. Let's talk about financing, really. Like, how are you structuring these deals? Using hard money,
Cool.
using cash? What are you doing?
We're using private money. So
Okay.
99% of the time we're using private money. So over the last couple of years, it's really, people love the fact that I was a home inspector before. So they know that we know what we're looking at. Track record kind of speaks for itself. We've done over probably 250, now probably 300 rehabs. And we've never not paid a lender back. So we're raising typically purchase and rehab, and we're paying it off on a refi or we're selling it. So on the refi, we were using community banks for a while. It just depends on like the environment we're in. So a lot of the stuff we're doing now is DSCR. So DSCR on the individual property now. I'm not bundling a lot of stuff. Just for the next couple of years until things cool down and so people stop freaking out, I'll probably take a lot of those and bundle them into a 2025 year AM community bank loan. But for now, I'm using these higher interest only sometimes loans and just stabilizing the asset and making sure that we can do something with in the future with the equity.
What are you seeing on those DSCR right now? 8, 9, 10?
It just depends on the leverage. So right now we're closing one tomorrow at 7.9%.
Nice.
And that's a rate and term. So they leveraged up to 78% on a rate and term on that.
Yeah.
So they'll leverage up to 80. I figured out a long time ago that these banks don't like to cash out ever. So pulling enough money to, even if you're trying to steal your equity up front, say if I spend 70 on a rehab and I'm all in 70 with my private money lender and it's worth 100, they do not want to cash you out that 80%. So 80 minus 70, that 10. So I'll just raise another 10 or so and then take my cash out up front and then rate and term refinance it on the back end.
Yeah. So from the private lender, they'll give you 80%.
So the private money lender will give me 100% purchase and rehab.
Yeah.
And then the back end bank, if instead of a 75% LTV loan, so 75 grand loan, you can get an 80 if I owe 80 to my private lender, if that makes sense.
Yeah, you just have to have that relationship with the private lender up front so that they will go up to whatever that number is.
Yeah.
Okay. So are you having any issues, or you can tap in as much money as you need?
Recently, anytime, if you follow me on Instagram, anytime I'm actively saying I need money, there's times where I'm tapped out. We probably have, 5, 6, maybe 7 million on the streets right now, private money, between 30-ish private money loans. It's just a lot of higher dollar projects that are about to close on the back end right now. So, and we just purchased, we just bought an 8 unit for 600 grand cash. We just bought a 9 unit for 450 grand cash. We've got a bunch of $400,000 to $500,000 projects. So just really trying to get those to pay off to start buying these $150,000 deals again, because I want to just spread it out.
So what happens with the private lender when you are on this project you're talking about, you're going to lose 20 grand. So you personally, but not the project, correct? The lender's being made whole, or what's the story there?
My lender's making 50 grand tomorrow and I'm bringing 20 grand to close the deal. And I told him that. I was like, hey, I know, and we're a little bit late on this loan, and I was very upfront with it. And I was like, hey, here's what's going on. I can pay you off if you want. I give all my lenders a 30-day guarantee. They get their money back. And I'm like, hey, I texted him yesterday because he's being a dick to me. I was like, hey, by the way, I'm losing 20 grand on this and you're making 40. So I just want to let you know, I'm a man of my word. I do what I say. Thank you for your patience.
Yeah. Good way to handle it, man.
That's the only way to handle it. There's so many people that run from it. It's just, you guys know what you're getting into when you're doing this business. It's not a secret. Like, you can lose money. Just be smart.
Yeah, that's solid. All right, let's talk then about these multifamily deals you got, man. So you just bought a 6 and an 8?
A 9 and an 8.
9 and an 8. Okay.
Yeah.
So are those going to be rehab projects? What's the story?
Yeah. So the 9, this is I think a pretty good deal. We bought it from a lady who was going under, and I ended up just talking to the private money lender. It has been on the market for a little while, and the private money lender just lost 250 grand selling it to me at $401,000. So he was like, I want out. I'm done. She did a new roof, new windows, did some framing. I have to redo pretty much everything. So it's an 8,300 square foot, 9 unit property. Mostly 1-1s. We're turning most of them all into 2-1s. We're going to spend 450 grand on rehab. So we're going to be all in 850 plus another 100 of holding, I would say. Yep. Should be worth 1.2, 1.3 when it's done. Gross rents are probably going to be 10.5 to 11,000. And hopefully our debt that we're going to get on it will be maybe 8 grand PITI. And we manage in-house. So not a home run by any means, but it'll be a good long-term hold.
So your value on that deal, you've got rents are what, 10, 11?
10.5.
All right, 10.5. And what is that? 10 times 12, 126 minus what? What do you think your expenses are going to be? 50%?
Yeah, I run at a 40 to 50% expense ratio.
45%? 69? And so your caps up there, what are you trading that thing at?
I get different answers, but seven or eight.
Yeah. That's awesome. It's one of those. So you're going to hold on to that deal.
Would love to. It's just a old, beautiful building. It's not in the best area, but it's not bad by any means. So, and it's also a test too of, okay, I say on the internet, I'm doing all these rehabs, like, all right, let's do it. I'm going to pay an architect 20 grand for the plans. It's a bigger boy deal.
Yeah. Nice. It's always interesting. Like coming from the world of just winging it on the fly. Like I'm going to rehab this house. I see it. A wall needs to go there. You don't have actual plans for it, but you just tell your guy, put a wall there.
Yeah.
To moving into talking to architects and like getting the plans drawn up and having the as-built compared to what it's going to look like at the end. It does bring a lot of clarity to every trade and what they need to be doing, like where your can lights are going, where this is happening, everything on there. So I'll be curious to see how that project goes for you, man. So that's the 9. What about the 8?
8 is 8 1 bed, 1 baths in a really established downtown area now. They listed it for 600. We ended up lowballing like 480. And right away they emailed or texted back and they're like, do you want to see the inspection report? Because it fell out of contract a few times. And I was like, oh, these people want to play ball.
Yeah.
And ended up meeting at 529. All of them are occupied. 2 of them are rehabbed. So the 8, I was going to get them out right away, rehab them all. And the ARV is probably 900 or so. Rehab, it's really not that big of a rehab. We got to put split systems in each unit and then just cosmetically update it. But we found out like a couple days before closing that they lied about the lease terms, but the leases on the ones that we need to put, let's call it 15 grand of each unit to turn them, are about 800. So 800. And so the rents we would only get 900 to 950 after spending the 10 grand, 15 grand of rehab. And it's like a government agency that's paying it. So I'm like, all right, let's keep it. Let's delayed finance this thing. It's probably worth 800 or so, maybe 750 right now. I'm going to delayed finance it, probably get an 80% LTV loan. And if I have to bring a bunch of cash to close it, that's called 100 grand. I'll just keep one of those private money lenders on there because a lot of them lend out of IRAs. So I'll just keep that on there. And as they start to move out, I'll turn the units in a year, maybe 2 years. I'll go and take it to a community bank when now the property's seasoned. It's showing good rents. We have tax returns on this thing and really get good debt on the property.
Yeah. Nice. Yeah, that's a good strategy. But yeah. So the calculation that you did, if anybody's listening, right, and you want to know the calculations, 15 grand gets you $150 per month is essentially the calculation that you were doing.
Yeah.
And so whatever that is, say call it 100, that's $1,200 on a year divided by 15,000 spend, 8%, 10%, something like that, I would think, ROI. So yeah, if you're targeting and you're trying to get higher than that, you can do it over time, essentially is what you're working on. It's awesome, man. So again, that was a listed property?
Yep. Yeah. Both of them, actually.
Yeah. Really interesting. So one was with the private lender already, and you took them out. So that was helpful and easy. Basically a short sale that didn't have to go through a bank short sale process. Yeah.
It was a regular sale. We went through title. I paid my half and he paid. There was also a second. He was the second and the first was a hard money company. The hard money company still needed paid off.
The hard money company got made whole, but the private lender was out. Okay. Right. Yeah. Again, it's easier than dealing with a Bank of America or a Wells Fargo doing a short sale because essentially 100%. That's what that was. Somebody got shorted on that deal.
Pretty much. Yep.
Yeah, that's very cool. So any other cool projects that you got coming up? Anything you're working on? Any big news, things that are coming down the pipe?
Nothing like that. We have a big office space in contract, but I'm not sure it's going to pencil out. It's like a 30-unit office building. Office isn't very sexy, especially right now. We have it in contract for 1.8 and the rents are like 24,000 a month already. So there's some value add, but it's been chopped up and the utilities don't really make any sense and the HVAC. So we're still working through that. I don't have enough like really to speak on it.
Okay. All right. Hang on. So you're going from rehabbing, wholesaling, and now you're transitioning. So the company has to be sustaining itself at this point, right? You guys have had the systems in place. You got all the things. And so now you're looking out and up for any interesting deal or something specific? Because office is a left-hand turn.
That one just dropped into our lap. It just completely dropped into our lap. So no, we're
Wait,
I just want to make it clear. We are not looking for this stuff. Like most of this stuff we're not looking for, right? So like an 8-unit, 9-unit to me, like it's still in our wheelhouse. They need rehab. It's not much different. We already have another 8 unit. We have a couple of small commercials, but like this one was just in regular wholesale marketing. And they were just like, yeah, we have this. And we're opportunists. We're like, okay, let's talk about it.
Yeah.
But no, that is not something I'm like. An idiot right now would be like, I'm looking for massive office space. This sounds like a great opportunity.
That's an interesting deal. So again, how did you go about actually pricing it out, getting the price? And then are you trying to wholesale it? Are you trying to keep it? What are your thoughts around that?
Yeah, we right away just asked some people. We're like, okay, this is clearly not in our wheelhouse, but it's valued the same as a big multifamily, right? What's the income? What's the cap rate? What are some of the expenses? But once we dug in more, and my business partner has been running a lot of this stuff too. We walked it this last weekend. We're looking at what's the deferred maintenance? What are some of the repairs that are needed today? What are the leases? A lot of these people have been on leases for 15 years, like very established tenants. They've been there for a long time. So just really trying to figure out like, what's the expense multiplier? What's like the income approach? What is this thing maybe worth when it's done? What's it worth right now? So we're still working through that. I mean, we get different answers from different people, but one guy was saying it could be ARV of 3 million. Some people say it's worth like 2.3 as it sits, and they wanted 1.8-ish. And we were like, yeah, it sounds reasonable. Let's put it in contract and let's do a bunch of due diligence. And in worst case scenario, it's still a newer thing to us. Let's learn a lot. Let's get some education on this thing and figure it out.
So have you talked to, I will credit my brother with some of the stuff that he's done because he's doing storage and doing all kinds of stuff, but he wholesaled a bunch of these things, and he just made a ton of calls to potential buyers, right? And so have you already done that, or is that something you guys are working on?
Not yet.
You might be shocked, man. You find just some random company looking for something. And so I don't know if you're going to wholesale it, and if it is 2.3, man, you could just pop it real fast and be done and move on. So it might be something to think about, finding somebody who's, in that market looking to buy stuff like that.
No doubt.
But that's cool. Hey, man, it was good catching up. Like, good chat and seeing what you're working on. Ton of tips in here, man. Ton of things. If you're looking to rehab, looking to do something, I really appreciate it. And you are putting out content of your own, correct? So we've got, let me see the shirt. What do you got? Real side
of real estate.
Yeah, check it out. We'll put a link in the show notes for that as well. A bunch of tips on real estate, real stories, things that happen. As you heard it today, he's losing 20 grand on a deal, and he's not afraid to talk about it. So I really appreciate the fresh approach and discussing the ups and the downs. Like you said earlier when we were offline, I think it's just like anyone not talking about some of the hardships, probably not a real person. It's an AI bot or a yo boy or something.
Careful who you listen to is all. There's a lot of people that talk about what they did 10 years ago, and maybe they did do well 10 years ago, but now they're not really active in the business. Like I said, if somebody tells you they've done over 100 deals, never lost, hit that unfollow button, because that person is a liar, one of the two.
Yeah. Right on. Again, man, I appreciate it. If you're looking for property, or if you have something to sell up in the Columbus, Ohio area, man, definitely reach out to Tommy. Again, appreciate you jumping on, sharing your knowledge.
Absolutely. Thanks, dude.
Catch you guys on the next episode.
Did you know that 80% of the agents we speak with got into real estate in order to gain passive income so they could obtain financial freedom and become work optional? If you want to stay up to date, the best way is to make sure you're subscribed. So if you haven't done that, go ahead and do it now. We'll catch you on the next episode.